Okay, and we are live. Roy,
Howdy.
Roy said I look very haggard behind the scenes, backstage, just before we were about to go live. So I'll let you guys decide. He also said I should crack a Celsius, so I'm going to do that right now. How's it going?
And I'm kind of wishing I cracked a Monster, but I didn't. I'm trying to cut back. So
yeah.
Yeah, I'm doing well. Other than Tuesdays are a busy day. Like, lots of news Monday and Tuesday, and it's hard to keep up on Tuesday for me. So we also, by the way, if you guys are new, the way that this show works is that we have a couple of main topics. So tonight we're going to be discussing Bmnr and crypto here in about 30 minutes time. We have a special guest that's coming on. I don't know if you've announced the guest or not. Do we save that?
Well, we can. I don't mind either way.
All right, and I'll save it then. So special guest will remain anonymous for a moment.
I think he announced it though on his thing.
How dare he? All right, yeah, it's the president of the United States is coming, and no, just kidding. Can you imagine? But no, TJ the Will Deal is coming. So about 30 minutes, we'll discuss BMR. Before then, we have a lot of AI topics. Of course, this is Nvidia earnings eve. There's some major changes on 13F filings for institutions. A lot of people fleeing from the hills, screaming that it's a bubble about capital expenditure. And there's a few other items too. So Tevis, where do you want to start?
Well, we can start wherever, and we can leave the BMNR news for when our guests here. It's been an interesting week, man. It's been down, to say the least, and finally finding a little bit of footing, I guess, today. But who knows? Every day is a new adventure in this market.
Yeah, no, for sure. It's I just did a BMR video that had an update. You had a really good BMR video. Actually, well, maybe the last 10 minutes are trash. I don't know. I didn't see the last 10 minutes, so I need to go and finish that. But the rest of it's really good, so I'm sure it's all great. We'll certainly talk about that here in just a bit. Nvidia is coming up. You don't have a position unless something has changed. It's falling a little bit. Are you like watching this one closely, or are you just like, doesn't really matter unless it tanks the market?
That's my consensus. It doesn't really matter unless it tanks the market. I would be happy if Nvidia went to 200. I would be less happy if Nvidia went to 160. Let's put it that way. And if Nvidia went to 160, I wouldn't really care, except for the fact that it's going to drag everything down. And poor little Nbis is just finding its footing, up 5%, back to 90. Just don't kick it down anymore. It's been hurt already.
Yeah, I'd watched it. I've not had really time. Like Tuesdays are weird because it's like before the market I can watch, after the market, but like in between, I have no idea. So, and that's not on my main watches because I don't know it. So, but I've been eyeing it more just because it keeps falling and falling and falling. I'm like, it's pretty attractive. I don't have a lot of cash. I'm gonna wait, and it probably will never come to the price where I want it. But hey,
yeah, I'm doing my best Tanner impression, and it's just the November thing I told you guys about, the Ted Lasso / Tanner Manson stash, and this will be gone in 10 days or 12 days. So enjoy it. Yeah.
Yeah. And then, what follows that is supposed to be Decembeard, I think. So just grow it all out.
Hey, man. Don't threaten me with a good time.
So the bubble AI, that's okay. Actually, let's start off with the Peter Thiel post that you sent me, because I thought that was really interesting with the 13F filings. Some massive names departing Nvidia. Now there's also buyers at the same time as there are any people that are leaving as well. Pull this up. And by the way, I'm wondering, like, anyone else in the comments that uses X, is the new messaging system just utter trash? Because it eats messages.
The mobile version does not sync with the web version, so that's not great.
Yeah, that's like a really horrible product. So good job.
Yeah, Nbis was up today because of the announcement, I believe, of the Saudi Arabians upping their investment to $1 trillion from $600 billion in AI, and that's going to be pretty big. Obviously, we had deals between Microsoft and Anthropic and Nvidia as well, which I'm sure we can talk about. Nbis also had their earnings last week. I don't know if we covered it in our last week's bootleg.
We did. Yeah.
We might. What else? There was this other thing. Oh yeah, the people that are now finally selling Nvidia.
Yeah, this I couldn't find the other post. Must have I saw it on mobile, I guess. So it's eaten. Good job.
So let me see if I can share it.
Yeah, while you're looking that up, yeah, this is it right here. From
You want me to play the clip?
Yeah, that'd be great. Let me actually move this too.
I'll move it up to 1.25x because people complain when I go to 1.5. And here's the clip. So this was earlier today at the Oval Office. Let me know if you guys can hear this.
And today and tomorrow we're going to announce that we are going to increase that 600 billion to almost $1 trillion of investment, real investment and real opportunity by details in many areas. And the agreement that we are signing today in many areas in technology, in AI, in earth materials, magnet, etc., that will create a lot of investment opportunities.
So you are doing that now. You're saying to me now that the 600 billion will be 1 trillion.
Definitely, because what we are signing will facilitate that. And
I like that very
much.
You worked hard. No, that's great. I appreciate that. That's great. We're doing numbers that nobody's ever done. And in all fairness, if you didn't see potential in the U.S., you wouldn't be doing that.
Definitely.
You don't want to lose money.
As you said, Mr. President, it's the most hottest country in the planet. But what you're creating is not about opportunity today. It's about also long-term opportunity in America that will affect American economy positively in the next coming decades, preparing the right foundation of emerging technologies. That's a game changer for America in a good way, and we want to be part of it.
It's a game changer for America, and we want to be a part of it. And yeah, I loved. I was watching the full thing on Tanner's live stream, and he just joshes around like he's one of the guys, you know. Meanwhile, this is like royalty. Trump doesn't care, dude.
Yeah, it's really funny. Just how he treats people that he's peers with, honestly. So he may not think he has any peers. I don't know, but that continues. Like there was that announcement today. There's of course an investment in Anthropic as well, a very massive investment, and they're doing very well too. We just are getting these at this point 2 or 3 times, 4 times, 5 times a week, every single week, and it's almost relentless. And that's one of the concerns that a lot of people have is on this kind of spending regarding the capital expenditure, specifically just to data centers. If you look at the rest of the world, they're like, there's a little bit of investment there. There's more so in Germany. That's actually a little bit surprising. China, they're doing a lot more than this number would indicate. But I mean, this is compared to the rest of the world combined, massive. So are the MagSav, the hyperscalers, data centers, are they building way too much? And why not, Tevis? Because I know the answer is no.
Well, I think it's a fair question to be asking. So we might have opinions on what the answers should be because the level of spending is unprecedented relative to anything else that we've seen. But this paradigm shift, I think, is also unprecedented. And so we don't necessarily know what the outer boundaries are of this total addressable market because it's so quickly developing. Every single year, it expands the capabilities that we thought were previously the boundaries, if that makes sense. When ChatGPT was released, if we roll back the clock to 2023, we didn't think that it would do as much as it does today. And even today, we don't think it's going to do as much as it's going to do in 2 years and 3 years. And for all of that, there needs to be significant capital expenditures, significant investment. And you're seeing that on the global level with geopolitics, with the clip that we just saw. You're also seeing it on the company level. And I think with many companies, I forget, whether this was the after hours that I was saying this or the FinTech Friday, at the end of the day, these companies, the hyperscalers, Mag7, whatever you want to call them, they have a very common playbook. And that playbook is run at a deficit or a loss for a long period of time while you reinvest everything back into compounding your growth. And only once you've captured the addressable market, when the perimeter of the total addressable market becomes known, when you can see where the road ends, at that point, you change the priority to monetization. because at that point you have one, the war of attrition, and it becomes from a perfect competition closer to like an oligopoly with 3 or 4 players owning that market. And at that point, then you can monetize because you've cornered the market and there are fewer alternatives out there for competition. So I think that's a main point to highlight, because that exact same playbook is playing out in the AI space, right? So I think the questions are warranted. I think the concern is warranted, but right now it's like a holding pattern, at least in my mind, because we don't necessarily know. We could come out next year and we could say that demand absolutely justifies the capital expenditures. I mean, that's what we're seeing, at least from a Nbis point of view, right? That's what we're seeing from an Nvidia point of view. So it really depends on the rate of innovation that we also see. So yeah.
Yeah. I agree. Like there's phases that where initially you're not necessarily, well, in this case, they're not pre-revenue. They're making revenue, but they are doing massive amounts of CapEx that we saw recently in that graphic. So of course, they're not going to be profitable for a while. What we've seen is demand is through the roof. So it's not a case of them building so much and then hoping that the customers will get there. Customers are banging at the door saying, let us in, let us in. And they're like, well, we don't have anything to sell you right now. We're out. So that's not a sign of a bubble. That's not really we'll build it and then they'll come type of mentality with many of the .com type of companies. So like, is there a place where eventually we'll see an overbuilt, that there's a lot more supply than there is actual a need and demand? Yeah, we'll probably get to that point eventually, but that's usually years and years down the road. Good for consumers, good for businesses as well. Not great for those that are in this race, but they're on the other side of the argument. So just because I want to give it the fair shake, this Amit posted about, but it was from an NYU professor called the Dean of Valuations, Aswath Damodaran. I'm not sure how to say his last name actually. And he said, with all of Mag 7, the more CapEx they spend, the more cautious I become. If you're planning to buy them, it's not a great time. The only ones I would say to buy is Apple. It's the most cautious of these companies. And the one and only, I would say, good point, or the point that I agree with him on that, is like, if people actually think that AI is a bubble and they should be concerned and scared at this point, Apple is allergic to AI. And so they're just not building it. They're partnering a little bit here and there, but yeah, they'll be completely fine. Now, some pushback. I think this guy doesn't really understand disruption. And Austin Harrison, he mentioned that this is the same guy that actually called Uber an overvalued buzzword in 2014. If you look at some of his arguments, like right here, he hates the word disruption, the idea of disruption. He just called it a buzzword. I think the problem is he doesn't understand disruption. He doesn't understand when there's a nascent technology that is ramping up dramatically, that people are seeing massive ROI in terms of the business. Not everybody. There are some not nearly as good AI products out there as well. And there's some that are like Palantir that are amazing. Always got to pump the Palantir stuff. But yeah, I think that's his biggest issue, is that he doesn't understand disruption. A lot of the people that are bears are either on the sidelines, and they have been this whole time. They're frustrated that they're not in this, being dishonest and saying, hey, let's do what we can to try to drop down these prices, because they've missed a lot of this rally. And by the way, institutions have been buying heavy over this dip. Unlike the previous dip in April, they kind of missed the boat there, and retail bought massively. And then, lastly, there are some actual bears out there that are, reasonable, and they understand valuations, and it's fine to be bearish. You don't have to be in every single technology, but man, this is a big one. And I think he's missing the forest for the trees.
Yeah. I mean, look, man, I think whenever these guys speak, I'm sort of torn between putting their pedigree up and their reputation of them having been right time and again, with the fact that I think the market has fundamentally changed with the liquidity that's come in the market over the last 10 to 15 years, that the valuations are never going to be what they were back in, 1960, 1970, because it's just a different dynamic. And I think with Warren Buffett, like, he just bought, or Berkshire, let's say, Greg Abel most likely bought Google. Charlie Munger has said, hey, we kick ourselves in the ass all the time for missing Google. We don't know how we missed it. Warren Buffett has a story around Google where he's like, hey, we bought Geico, and Geico was paying like $10 for every time like a sale came through Google or something like this. Basically, they were paying a cut to Google. So it was very evident from the start, and yet they didn't buy it. And the thing that held them back was valuation concerns. And so the pendulum that I sort of sit on whenever I see these articles is on one side of saying, are these guys all right? And at some point, we're going to have some massive culling and things are going to come back to fairly valued territory, as they explain in the theoretical, like in the books? Or is it just a fundamentally different game we're playing? That the market is changed beyond repair, let's say. It's never going to be the same market that they were in when they were making these valuations. And as a result, they are irrelevant because they're going to get left behind. It's the same people that have, like, I would imagine that if you gathered all of these, the Dina valuation, even Warren Buffett and a lot of these like traditional like value investors in a room, they would have lost more money by not investing in something as a result of valuation from an opportunity cost perspective than by investing in the wrong thing. So all that to say is, like, is Mag 7 overvalued? I think there's a strong argument to be made that no, because the growth rates justify it. The resources that they have at their disposal and the flexibility that they have from a maneuverability perspective justifies it. I don't think that you're ever going to get to a place where Mag 7 is undervalued, because these are the compounders, and you naturally live in a system that rewards compounders. And so as a result, I just think these guys are going to be consistently wrong, and buying Apple is like doubly wrong because they're a stocks company now.
As we saw last week, yes. So you mentioned Google a couple of times, and that's a couple of pieces of news there that we should definitely hit. One is, of course, Berkshire Hathaway went out with their 13F filing. They've been buying Google, which, if you look at the sizing of it, it's massive, for anybody that's here except for Tevis because he's a billionaire. But for the rest of us, or for Berkshire Hathaway, they have so much money, so much cash. This is a very small position as well. So is that what does that signal, if anything, Tevis, or how did you react to that news that Berkshire bought Google?
I reposted, I think it was Tanner who originally posted it. And I basically said, guys, this is not Buffett. This is a false alarm. And to me, it signaled the changing of the guard. Warren, or people get mad at me when I say Warren like he's a peer, Mr. Buffett has signaled this year that he wants to take a more passive step in the company operations. And eventually he's going to take a step down altogether very shortly, because he's like 96 or something. And Greg Abel, and I forget the other guy's name, like the lieutenants, are going to take over. And they're younger guys, and they have the playbook essentially in their mind for how, like, what the principles are that Berkshire was built upon. But they also have the wherewithal of understanding the contextual pieces around the market today. And I think that they can make a more nuanced pick. I'm not saying they're going to YOLO into freaking, SoFi or whatever, but I'm saying, like, they're still going to be very cautious, while at the same time not being afraid to overpay every now and again.
Now, if they're okay, so they own Apple, they own Amazon, they own Google. By the way, I agree. I think that this is the raising of massive amounts of cash and then buying Google as well. Buffett, amazing, a very accomplished, wise man who, I hope if I last that long that I'll have his mind at that age, because he's brilliant. But clearly, I don't think it was him that bought Google. I would be really surprised if it was. Maybe he'll come out and say it. But I wouldn't be surprised, with the changing of the guard and the amount of cash that they have as well, that they buy some non-Berkshire names. So if, and I posed this question on X a while ago, they already own Amazon, they already own Apple, they already own Google. What's the next Mag 7 stock that they would buy?
Tesla. Just kidding.
I was like, okay, you gotta pitch that argument for me. So,
No, just kidding. Okay, they already own Microsoft, they already own Apple, they already own Google. What's left in the Mag 7? You have Nvidia, Meta. Is Netflix still in there?
Not Netflix. No, that's a FANG stock. Netflix would probably be a good answer. So, and not Broadcom either. So Tesla, and why am I missing one? Oh man, I got to look at my phone. Sorry, guys.
So you have Meta, you have Tesla, you have Amazon, and then who's the last one?
On Tesla, Nvidia, Google,
Oracle?
Apple. What's that?
Oracle?
No, it's not Mag 7.
I said Amazon. Bmnr.
Microsoft.
You said they had Microsoft.
No, they don't have Microsoft. So yeah, that's where we're messing up. So
Okay,
so they have Amazon,
they have
they
Apple, they have Google.
Apple, and they have Google. Right.
They don't have Amazon. So
no. They have Amazon, they have Google, they have Apple.
Berkshire has Amazon?
Mhm.
I didn't know that.
Yeah.
Okay, so Berkshire has Amazon, Apple, and Google. What's left is Microsoft, Tesla, Nvidia, and the last one is
Okay. Bro. You are tired. I told you. You look tired. You're like, no, I'm fine. You haven't had that Celsius, man. You just
know
have
what?
good. By the way, Q&A we'll have at the end. So I see some questions that I do want to get to. I see a question on VG and some other things, some PayPal stuff. We'll do those rapid fire as we get near the end. I'm going to pull up right quick here.
So hold on. Let me answer your question, Roy. Also, let me know what the questions are. Guys, I'm sorry, I haven't been bookmarking questions, but you guys can re-ask them and I'll bookmark them for sure. So I don't think they'd buy Tesla just on principle alone, right? Microsoft, I think, is a strong candidate. I don't think they'd buy Nvidia, quite frankly, because I think there is a technical complexity associated with Nvidia around them having to understand the tech, and they just traditionally have not been tech investors as a result of that lack of contextual knowledge, let's say. Subject matter expertise. So no Tesla, no Nvidia. I think Microsoft and Meta are probably the best bets, but I do think that Microsoft would win out over Meta. I mean, I think Meta is cheaper than Microsoft, but I think Microsoft, they would understand more for sure.
Yeah. I'm thinking Microsoft as well. If you throw this up, I'll actually show you what the holdings and the breakdown and everything. By the way, this is Fiscal AI. I know I've showed this off in a couple of videos too, but this is another thing you can do with it as well, is look at all these holdings and ETFs and dynamic. You can sort, you can screen. It's really nice. But yeah, you can see Amazon right there, which frankly, I didn't realize. Like it's a small amount, 0.8%. But oftentimes, like if they begin to scale in some companies like Google, then they continue to add over time. They don't necessarily go in all at once. We'll have to kind of see. But yeah, as far as like position sizing, they did trim quite a bit of Apple too, by the way, but it's still a massive holding. So and there's Google, by the way, 1.6%. So it's quite small. At least it shows up Amazon somewhere over here. So I think that all of them except for Tesla are potentially appealing. Now, the one that I think is probably the least likely, but it's one that they should buy, is Nvidia. Nvidia, I mean, it just makes a lot of sense, but Google is pretty safe. So it made sense that they bought that. I wouldn't be surprised if they end up doing Microsoft or Meta, like you said. Meta on valuation, growth, Zuckerberg's a great CEO and all that. It's a little bit different of a pivot. Microsoft is really easy for them to just see the dominance of that. And I think they tend to like that as well. But yeah, if they came out of the gates, Tevis, and like next quarter they bought Nvidia, what would that signal to you?
That would be really interesting, actually, because we're seeing legendary investors sell out of Nvidia en masse, and we're going to talk about that in a second. And so this would be sort of a counter signal. I think when Warren Buffett buys Nvidia, dude, I don't even know, because like they bought Google and Google pumped 5% after hours on the back of that news in a massive red market day. Google was like the one green light. Would that mark a top if somebody like Buffett, like, is it the same as saying, oh, you know, my dad texted me asking if Nvidia is the next thing he should buy? Like it's reached that level? Or would it be like Apple in, 2015, 2016 when he bought that and it ran for like 7 more years? I don't know.
By the way, there's one other piece of Google news too. I don't think I'll play this video, but they launched Gemini 3, if you want to throw that up. And it seems really good. I used, I don't pay for Gemini, so I've not used this, but I've been using Gemini 2.5, the free version, for quite a bit, and it's really good. I'm not always the most bullish on Google, but I got to call it like it is. They've really improved this product. And if you look at these actual rankings, Gemini 3 Pro, now this, you can go through and see this is in DeepMind. So it is a Google thing. And you notice that they did not include Grok here. There's a couple of reasons for that, but Grok is actually doing well. But this is not an aberration, because you can actually go here to LMSys, the LM Arena, basically run by Hugging Face, and you can look and see through all these different types of uses for LLMs that they're usually right at the top. If not, they're really close. Now, Grok 4.1 is actually really good as well. So I don't think it's that they're running away from the competition, that nobody's going to be able to catch up. But yeah, they are definitely emerging as one very clear leader here. So there's a reason why it pumped, not just Warren Buffett. They're doing a lot of things right. But yeah, Nvidia. So earnings are coming up tomorrow. I think that they're going to do really well. But I have no feel for how the market will react, because we've seen names that have done really, really well, but stocks that have run up a good bit and have high expectations, they crush the expectations, and yet they get crushed anyway. What is your guess as far as not earnings results, because we all know that Nvidia is going to crush it, but the reaction of the stock price tomorrow?
I think it's going to be largely based on the guidance that they provide around the demand. And that's my main fear, is if they say anything that is anything other than pure bullishness for the demand continuing, then Nbis is going to be the first to get rocked by that. Even though Nbis is already booked for the first half of 26.
So Nbis has earnings tomorrow then, again?
Pretty much, yeah. The whole market has earnings tomorrow.
I mean, honestly, yeah, that's the way it feels. And we've been here before. This, it doesn't happen every quarter, but it's not uncommon. I think it might have been 3 quarters ago when we had this, maybe 4, where the market was pulling back. Mag 7 didn't save it until Nvidia came in. And Jensen, they always hit it out of the park. And so they had great earnings. The market recovered or rebounded at that point as well. So I'm not sure. This right here, it just feels like people are looking for a reason to sell more than anything, because earnings have been good. There are cracks, like we've talked about, in the economy. There's cracks on the consumer side. There's issues with inflation. Nothing's really changed there. Tariff stuff seems like it's mostly resolved. Or it's well on its way, and I'm curious, when that's actually finalized, especially with China, if we'll have a little bit different reaction there. But yeah, we're kind of in a bit of a doldrums. So, last kind of question on the market here: we're nearing Santa Claus rally season. Do we get one?
Yes, I think we do.
Is Jensen Huang Santa Claus then?
Well, no. Given where we are in the calendar year, man, we might get Jensen be Black Friday before he's Santa Claus. But I think it'll we'll have time until December for all these fears to be assuaged. Probably Jay Powell is going to be Santa Claus if he comes out and he gives us a 25 bip cut. Then I'll take that. Yeah.
Yeah, I actually heard that the rates had shifted a good bit today.
Our guest here.
What's that?
Our guest.
All right. Well, let's go ahead and pivot over to, without further ado, go ahead and announce them.
Ladies and gentlemen, please welcome our special guest for today, TJ the Wheel Deal.
What's up, guys? How are you?
How's it going, man?
Hey, TJ.
I'm good. Can you guys hear me?
Yes.
Yeah.
I'm trying to be like y'all. I got the microphone real close.
That sounds good.
Late night with Nbis and Roy.
Hey, man.
How are you guys, man? First of all, I want to thank y'all for taking the time, because I've built up an enormous position on Bmnr, but there's a lot of things I just don't understand yet. So I did the Stanley Druckenmiller approach. Yep. Invest, then investigate. So the investing part turns out that it's actually quite easy for me, because if I just buy into the story, I believe in the management, I feel like the company has a moat. I think the market sentiment is I'm on the right side of things in my mind. It's pretty easy for me to pull the trigger, truthfully. It's really easy for me to pull the trigger on something I believe in. But then there comes the investigate part. And that's the part that I'm like, okay, I got Grok, I got ChatGPT, but then I'm like, there's still like a lot of holes in my thesis, if you will, as far as the knowledge base goes. So anyway, if y'all could give me like an elevator pitch on Bmnr, and then I'll give you guys the questions after. So Roy, I've listened to your little deal on Bmnr yesterday. So if you can just give me like a little 2 to 3 minute elevator pitch, because I think it might fill in some of the holes for me. And then if Tevis could do the same, and I've watched like freaking 3 hours of Tevis rambling about this company now every Saturday or Sunday. So.
Yeah, let me pull up a couple of things, and while I do so, if you guys aren't familiar with TJ is a great guy, fellow Texan as well, and a friend, and an awesome investor. And his strategy is different than ours. He wheels and does options, and so if you're interested in that, be sure to follow him. Tevis, do you mind while I'm pulling this up and talking through that a little bit of thesis, just his where they can find him on X? So they can see that because it's a little bit hidden right here. But and then let me share this screen too, if you don't mind throwing that up.
I will share that screen. I'll drop TJ's Twitter in the chat and I'll pin it.
All right. So I won't like go super deep, but yeah, just the simple thesis is Ethereum. It's built around Ethereum specifically. So Ethereum has a couple of things that institutions really want. One is heavy decentralization. And it also it's very well understood. It's been around for a while for institutions, and it has 100% uptime. And so with those factors, plus a little bit of a yield, it makes it very compelling for a lot of people that are trying to build on blockchain, on Web3. Ethereum specifically, like the biggest piece of the thesis is stablecoin. So stablecoin is something that is just growing rampantly. I detail a lot of this in the video that you watched the other day. But that continues to be unabated for Ethereum. And so more than half of the stable coin that's around the world runs on the Ethereum network, which is incredibly impressive. And I think it will continue to be so. There will be other chains that are specialized for other things, but Ethereum is going to be the bread and butter as far as stable coins. And that is an up and to the right phenomenon. I don't see anything else disrupting that. Possibly something like Stripe's layer one coin that they're trying to develop, but that's incredibly unlikely, and it'd be really hard to do, although they can use it internally, or at least for their projects, and be just fine. So there will be a lot of other chains, but Ethereum is the one. Ethereum also, like, you have this phenomenon of supply and demand. And so I'd have to look up where I found that the other day. But what's happened as far as supply that's on on all the different platforms that are out there, like Binance and Coinbase and so forth, continues to diminish. Now, there's still a good bit left, but essentially since digital asset treasuries have come online and institutions have bought into the thesis and they are buying massively, although we do see some ebb and flow each and every week, we're seeing that supply be falling down actually precipitously ever since July 1st, when not just Bmnr, but many others began to accumulate. And so if you look here, this is the Ethereum treasury companies, ETH holdings by company. And we can see Bitmine is by far and above. SBET is the next best bet as far as this. ETHM is right there, the Ether Machine. ETHZilla is down a little bit below. They actually had to sell some because they're so far under MNAV. So so there's like two parts of this. Ethereum is going to gain a lot of adoption, and it's just a basic supply and demand type of thing over time, that eventually there's a whole lot more buyers and sellers even right now. And as a result, you're going to get this supply crunch. Now, it's going to take a while to play out. I think the price will accumulate and appreciate over the meantime. And we'll probably have a crypto winter between now and then as well. But if they continue to buy at the pace that they've been buying, in about 15 months, there will be no supply of Ethereum left on all the major exchanges and even the minor exchanges as well. And that's going to send things into a supply shock. More likely, we're going to see some ebb and flow. It's not going to be quite as fast as it has been recently of what we see here. But as we get near the end, and there's about 5 million or so, 5 billion or so Ethereum left, 5 million. Yeah. Then we will suddenly see a race to try to grab those up, even as prices accumulating. So that's the Ethereum thesis. And then the Bmnr specifically is, we've seen this strategy play out before in another type of holding. So we have Ethereum here. If we look at Bitcoin, we can see there's one leader. It's strategy, MSTR. They own the most, they hold the most, they've appreciated the most, they have the most trading volume. Yes, their market cap has been falling. Yes, their MNAV is no longer trading at a very high premium. So not everything is perfect. Again, it's a leverage bet on Bitcoin, a little bit different strategy and setup than Ethereum. And so we're seeing the exact same thing playing out. That was my thesis when I began buying back here sometime in early August. And it looks like that's the case, is that there's really one clear leader that's emerging in terms of that and in terms of trading volume. Now, what's really interesting with this type of strategy, it took me a little while to understand this before I jumped into Bmnr, is this trading volume, which they do report on each and every week, in addition to a lot of other numbers, is very important, because you want if you're selling your stock, which Bmnr is, to buy Ethereum, the underlying, you want very liquid conditions. And so here you can see the liquidity. It's just dominated by Bmnr. And SBET has okay liquidity, I suppose, compared to everybody else, but everybody else is so small. So it's tough for them to be able to sell and not really cause a lot of downward pain and pressure on their market. Now, the last bit of this too is, as a leader emerges in this, and of course everybody likes Tom Lee, then it tends to be that institutions and also individuals flock to that one as well. And so you don't see where you might see, and you see the short thesis basically postulate that there's going to be diminishing returns because there's a lot of competition. Well, the competition is great for Bitmine because they're buying more Ethereum, which again helps as far as the upward momentum in Ethereum price over time, not every week or every month necessarily. And B, I mean, you can see that it themselves. Yes, Bitmine is down a bit, but if you look at the actual percentages, Bitmine continues to get more and more trading volume as well. And I think that's going to continue to play out. So that's the overly simplified, almost stupidly simplified thesis that I have there.
I love it. I love it. I put some questions in the chat for Tevis. Maybe you could help answer these along the way. Roy, I really love how succinct that was. So I'm going to try to find a couple of them. One is along the ways. Yeah. What is the supply shock? Because I feel like Tevis, I feel like I'm talking to Jason Less right now, and he's always like touting the balance sheet when it comes to Riot. And I feel like Tevis says something called supply shock and Ethereum frequently on his videos. That's one. Another one is.
So, let me answer that.
Take one at a time. You want to take one at a time?
Yeah. So here we have CryptoQuant. This is basically the Ethereum that's on exchanges right now, exchange reserves, and you can see that that's going down.
Right.
So from a basic supply and demand, like economics point of view, the lower supply is, the higher the price theoretically is.
Right.
Right. And if there's no supply on exchanges, that's either in cold storage or being locked up in staking. And essentially it's not available for trading purposes. So that's what the supply shock is. Now, why would this be trending down? Well, the first principles thinking would say it's more demand than it's supply. There's more buyers than there are sellers. And a lot of those buyers are institutions, are ETFs, hedge funds, nation states to some degree, digital asset treasury companies. So like Tom Lee with Bitmine, there's a lot of other digital asset treasury companies that are popping up. There was one that just popped up in Japan. And all of them help the thesis of one another, because if you have a digital asset treasury company, well, the value of your company is derived from the value of your treasury, of what you hold. Now, if I have one and then Roy goes and opens another one, well, him buying ETH is helping me because it's lowering the outstanding supply here, and the demand is high because of these companies and because of institutions. And so theoretically, the price is going to go up because there's going to be not enough Ethereum that's exchanging hands as more and more of these companies start to stake, more individuals start to stake, especially big institutions stake. So that's the supply shock thesis. Roy, anything to add there?
Yeah, so you see when it really started accelerating downward, that's what I was talking about around July 1st. That's when a lot of these digital asset treasuries really went online or were just buying up gobs. And that's continued. Now, it's not going to just fall straight down like this. You can see in the past chart, there's some ebb and flow as well. But I can't think of a single digital asset treasury that's going to be like, you know what, never mind, guys, because these are very capital light businesses. Like they can sit and wait and they're fine. They don't have a lot of expenses as far as on the day by day. Plus, you have staking revenue if Tom Lee would actually ever stake. Yeah, so we're going to continue to see this supply get really eaten into, and I think we're not going to see less and less, but more and more. And so it's kind of like, during COVID when things would kind of start to run out, or there'd be not enough supply, or at least people would perceive it that way. Like toilet paper is one of those things. Plenty of toilet paper, and I don't know, COVID wasn't like a explosive diarrhea type of thing, but people acted like it. And so when, not if, but when toilet paper sold out, like people sometimes would just jack up the price to crazy amounts. That is supply shock. Sometimes artificial, sometimes very real. Either way, that's what is going to happen eventually here. Bitcoin also same phenomenon, not quite as aggressive, but yeah, Ethereum, even though it technically could be an infinite supply, the actual supply of Ethereum that's existing has been stable since the end of 2022 just because of the gas burn rate.
So yeah, that's one other thing to highlight on. Like Ethereum doesn't have a fixed supply like Bitcoin does. Bitcoin has 21 billion. Ethereum, like new Ethereum is issued to validators as base rewards, but it's actually net negative on most days. And what that means is there's more Ethereum that's burned from the ecosystem than that's issued in that same day, because the burning essentially works like a fee. Every time somebody uses the network, there's a base fee that's automatically burned. And what happens is that's deflationary. And as you have more network activity, you're going to have more burning. And as you have all of this demand that's buying all the outstanding supply, then it's going to accelerate even further, especially if you get more digital asset treasury companies online.
I love it. I love it. I have this other question over here that maybe you guys can tackle is in a few sentences, because I feel like there's a lot of questions that maybe you guys have answered, but sometimes people need to hear them again and again and again. It's like I've been going to church since I was a little kid, and I got to hear the same message 1,000 times before I oh, the pastor's talking to me today. You know what I mean? Like it's just the way that it is. So this one here is one my father-in-law asked me today. So why is Tom Lee able to buy more ETH than the next guy? Just a real simple question, and I legit could not give him a straight answer. I was like, well, he's probably got a lot of connections on Wall Street. He's like, that's great. I just would like to really know the answer to something like that. Like, okay, because there's a lot of companies out there that got a shitload of money. You know what I mean? So why is he able to just keep buying and buying and buying? Granted, you have to have the money to buy, but I'm just saying, like, I feel like some YouTube videos that I've seen make it sound like that's like one of the big Tom Lee effects, is that he's going to be able to buy more Ethereum than you could, like for whatever reasons, like he's privy to it. So I would just like to be able to give him an actual answer that I feel like I could defend, because he's so he'll grow.
There's two, maybe three reasons. So
okay.
One is that they've been trading above Mnv for a long time. Now, right now, depending on what you look at, and if you look at Blockworks, it looks like they're under. Nobody really knows until they do earnings. When the 10Q comes out, and hopefully be in the slide deck as well, they'll actually have the share count, so we'll know exactly where they're at, or at least where they were at that certain date. That'll be really helpful, actually, because depending on who you ask, they're close and slightly above or slightly below as well. If they're below, as many and most of the digital asset treasuries that run Ethereum have been and are, then if you sell your shares and buy Ethereum, you are diluting, and it's dilutive dilution, if that makes sense, because you're not selling overvalued shares, you're selling undervalued shares to buy Ethereum, not at a premium. So what tends to happen in the digital asset treasury phenomenon is partly because of liquidity, interest from institutions, and also retail investors as well, that there's an Mnv premium that tends to happen on one major player, just like we've seen with strategy, and we'll see what we've also seen so far with BitMine as well. We'll have to see how they play it out. Now, the other part is with this strategy, there's a couple of things you can do if you go way under MNAV. One is the ETHZilla technique, where they're trading pretty far under their MNAV. So in other words, if you just sold all the Ethereum at market, that is worth a lot more than the company. So they ended up saying, okay, forget this. We're going to sell some Ethereum, get some cash, and buy back our stock. And they did that. And actually now they're trading back above, or they were, at least were, I haven't checked recently. Yeah, they're above MNAV, at least according to the calculations, 1.43. So you can do that. Now, I think Tom Lee is probably going to be very reticent to do that unless they're trading really far under MNAV. The other thing is that, actually, I forgot what I was going to say. Man.
Well, maybe I can jump in with a point. Please. Because I think it does become, like, if you really think about it, it does become a virtuous cycle from a liquidity point of view. So let's say Tom Lee is this very well-connected guy on Wall Street, and he has friends with deep pockets. He's very articulate about selling. He's a salesperson, right? The moment that he gets connected with Bmnr, you're going to have way more liquidity in Bmnr because people are just bullish on Tom Lee. Well, that's also a virtuous cycle, because if Bmnr has more liquidity from these institutional partners, let's say, then it forms this little flywheel that's converting all of that Wall Street hype and connections into buying more Ethereum. And then what you have is you have BitMine buying up more, like they're able to buy more Ethereum because they have way more liquidity. They trade like between like 1.5 billion and 6.5 billion per day. They're like one of the most liquid stocks in the market, right? Relative to SBET and ETHZilla and these others. Like they're so small that they have no liquidity from an institutional perspective. So if I'm Cathie Wood, or if I'm Peter Thiel, or if I'm freaking Vanguard or BlackRock, I'm not going to go into the small players. Number one, because they're small players. They're not the number one player in the space. And number two, because there's not enough liquidity for me to actually be able to play in that. Like the pond is too small, right? And so from that perspective, Bmnr becomes the only game in town from a liquidity point of view.
Yeah, so the other thing was cash. BitMine always, when they report on Monday, they always have cash in their pocket. And that's kind of like having gas in the tank. So if you use an analogy of these Ethereum digital asset treasuries being ships that are out there in the water, a whole bunch of them were speedboats that raced ahead and used all their gas, and then they ran out and they're trading under MNAV. And so they have no more power and they're just at the mercy of the elements, hoping and praying that the tide will push them back to where they need to be. But for BitMine, they always keep some gas in the tank too. So that way they can either, if they go way under MNAV, they'll buy back their stock. They haven't done it yet, but I'm sure that at some point that they will. And if they are way over, then they'll dilute their stock and buy less expensive Ethereum as well. And so I think that's one of the reasons too why, unlike SBET, which I like that SBET is very clear as far as what their share count actually is, so you know exactly where the MNAV is. But that's also a little bit of a weakness too, because these are heavily shorted opportunities, and as a result, if those that are shorting you know exactly what your MNAV is and what your strategy is, that gives them a lot of information, which may not be accretive to the actual business. So yeah, that's why I would say, you know, they're differentiated from the other digital asset treasuries, and the short thesis, as far as there being too many of them, is probably the dumbest thing I've ever read.
So what about the staking? Because I feel like the magic wand that Tom Lee flashes is we can generate $300 to $400 million per year whenever the hell we feel like it, right? Paraphrasing, because he doesn't use that language. Well, why the hell hasn't he done it? Just like how hard is it to actually stake? Because like to me, and the way that I look is I sell options for a living. So I'm like, staking is like a form of like a covered call. You have to tie up your Ethereum for a certain amount of money. But what are the gimmies and the gotchas, right? When you sell a covered call, you're obligated to deliver the shares at a certain price if you decide not to roll that contract, right? If it hits that strike price, you're on the hook. So what can go wrong with staking? Or is it just a $300 to $400 million bill that he's just gonna pick up on the freaking street? Like how does it actually work? Because I already asked Grok and I can't even get like answers that I'm convinced of, if you will. Maybe ChatGPT would be better in this respect. Help me out. Talk to me like I'm a Labrador retriever.
Yeah. Can you throw this up, Tevis?
Sure.
So this is the validatorq.com, and you can see at the bottom the staking APR. So this is down into the right, and I think it'll continue to be. There are spikes as well. Now, at some point, it will bottom out, but yeah, like it's not as aggressively and precipitously as dropping as it was before, and there will be ebb and flow. But yeah, it's a nice source of income and revenue as well. Now, there are several different forms of staking. There's this staking as a validator, which certainly they want to do because it's good for the health of the network and it's important. There are some of the digital asset treasuries that also do liquid staking, which I don't fully understand. I would need like the technicals and how all that works, but it's not staking through a validator network. Some also do crypto lending, and so they'll lend out the Ethereum, and those will all generate higher yields than what you would get in the staking pool, which is why you would do them. Sometimes when you see a big shift from lending to staking, it's when, you know, for the APRs of one or the other have fluctuated above the other and they kind of invert. But yeah, this is dependable. It's reliant. They'll continue to have staking revenue, even if there is, that it's not at 3%. It might not never consistently be above 3% again. I don't know that it'll go much past or below 2.5%, and it might actually stabilize here, maybe even a little bit higher too. But yeah, I'm not in it for the staking revenue anymore than I'm in PayPal or Nvidia for the dividends. It's one of those nice extra bonuses.
So, okay.
And what do they do with this 300 to 400 million? Just buy more ETH?
Well,
is that the game plan, or has he said?
He hasn't said. So they have, by the way, results on Friday before the bell. They just, I think, announced that news earlier today. And that's one of the things that might be answered. That's the thing that everybody is asking is, why haven't they staked yet? And there's all kinds of different answers, like, oh, there's in-house infrastructure because they want to have full control over the validators, or it keeps the price artificially depressed because they want to buy more cheaper, and all of these other reasons. But like, the reality is that we don't necessarily know their thought process. And then the second question is, okay, I can do the back of the napkin math to determine where that 400 million comes in, because you just take their total amount and it's about 3 to 5% yield, and there you go. I don't know what they're going to do with it. If they're going to run like a drip campaign where they reinvest all of their staked, ETH back and they lock it back up into more staking rewards, or if they distribute that to shareholders. If they distribute that to shareholders, then it's like you can get a nice dividend. I think from a regulatory perspective, I think it was the House or the Senate or one of these regulatory bodies, they just cleared ambiguities around these companies being able to distribute the staking rewards to shareholders. So they could pay it off, I think, as a dividend right now if they wanted to.
Yes, I think they probably wouldn't do that for a while. Tanner said it. He said staking is paid in ETH, which is correct. So they don't even need to buy it; just accumulates over time. And I think they'll probably just want to do that. Staking also, like, are you familiar with what staking is, TJ? Or
yeah, no, dude, I'm not. I'm pretty hip to the game. These are a lot of questions that my members have. So I'm kind of like the voice of the tribe, if you will. I mean, guys, I wouldn't have 100,000 shares and 800 leaps if I didn't have a pretty good idea of what Tom Lee's trying to accomplish.
Yeah, no, I was just making sure.
So I don't come on here really for my benefit. It's for the benefit of the folks that follow my tweets and they watch my YouTubes and stuff like that. And it's also because it's important for you to know what you own, right? Like, it's like Peter Lynch, right? Like, know what you own and know why you own it. Because it's real easy to own a stock, guys. Like, this is gold for some of you guys. And I might be nobody from nowhere, but the reality is I got over $20 million in the stock market. A lot of you don't. So I got here and it wasn't an accident. I mean, that's 2 mile and horn. I'm just calling a spade a spade. Look me up. It all checks out. But here's the reality. Stocks are going to go up and down regardless of whether or not you know a damn thing about them. But it's real easy to own a stock when it's going up. It's real easy to own a stock when it's going up. But whenever the trade's not going your way, you're going to have to rely on this thing called conviction. And it is something that cannot be borrowed. You can go borrow capital. You can't borrow conviction. Like, you cannot borrow conviction. So you got to know what you own. You got to know why you own it. I have this real solid thesis. It's very politically oriented. I feel like somewhere along the way, if you thumb through the big, beautiful bill or what do they call it now? The Genius Act or something like that, and all this other stuff, and you start looking at little things, and it seems like the government wants the world to head in this direction of this blockchain, and Wall Street's coming on the blockchain, the government's going on the blockchain, and there's only one blockchain that you can actually build something on that's super reliable, right? Like there's others, but there's one main one that's called Ethereum. So to me, it's all based on, this is where the world's going, whether you want to believe it or not. To me, it's the cell phone. When I was an AT&T authorized dealer in 1999, I owned a company called Easy Digital in San Antonio, Texas. And the president of Nokia was doing a seminar for us at the Alamo Dome. And he was like, people are going to live on these devices. You're going to be able to do your emails, just like we're doing texting, because texting was like a real new thing back in 1999. All of these things that we're just getting started with, everything that you can do on your phone. And I was just like, oh, this dude's like tripping. Like, I don't know, like what he's all like. I just wasn't buying the story. And now just, you can't even function without these phones. So to me, like it's like the cell phone moment 2.0 now, where it's just like the web has gone through so many changes. I was at the University of Texas. I got my first email in 1994, 95. And it was like a real big deal. TJ at UTexas EDU or whatever. And I was like, oh my God. And when I got that electronic message, it like blew my mind, because I didn't grow up with a computer or anything, right? I was born in 1975. That shit wasn't readily available if you didn't have several $1,000s for an old ass, Macintosh or whatever, right? And I didn't come from that family. So I've seen the world change a lot in my short 50 years on this earth. And I just feel like in the next 10 to 15 years, there's going to be a much larger change. Like, I want you to take a step back, and I want you to look at life 20 years ago. You can't even recognize it today. Like if a gun to your head, you had to envision all of the things that are going on in this life right now, all of the technology that is readily accessible to us with just these phones. Bro, none of you guys would have been able to accurately predict that picture, like draw that picture. You would have fallen way, way short on this one. And I feel like that is where we're at with Ethereum in a nutshell. And it might not just be Ethereum. There's going to be other players, right? Like there's like V chain or something that I read about. There's the Solanas and all this other shit that's all nerdy, way above my pay grade. That's not what I do. I learned how to sell puts and calls, make a lot of money. I let the nerds be nerds. You know what I mean? Like that is not what I do. But anyway, so yes, I'm a lot more versed in this game than I'd like to lead on. But I feel like there's a lot of people that want to know, like how does it really work? And then what's Tom Lee's edge? Like what sets Bmnr apart from SBET? And then how is their strategy different than strategies? Because the word on the street is strategy can get liquidated if Bitcoin goes to certain levels, right?
Yeah, true.
It's my understanding that Bmnr is not in that situation.
Yeah.
So their capital structure is very different. That might be something we're talking about so that people could really get it, if that makes sense.
So the only thing that really limits that, I think Tom Lee just mentioned this on Closing Bell on Friday, a couple of days ago. He basically said, hey, look, we own 3% of supply. It's not leveraged. We're not selling. We're going to be a permanent holder. In other words, we can, if this thing goes to $10 per one Ethereum, they're not going to get liquidated. But the difficult thing might be it might be difficult for them to raise more money. But the difference and the reason fundamentally why I'm bullish on Bmnr and I wasn't an owner of MicroStrategy is as a result of the staking, because as you have more transactions that are happening on that network, as you have more activity on that network, Bmnr is always going to be able to essentially make revenue, and they can always maneuver with that, whether it's their side bets, whether it's just holding more ETH, or whatever the case may be, dividends, distributions, it doesn't matter. So I think that's the piece that is important with regards to leverage. Sorry, Roy, do you want me to share your screen? You're on mute.
Yeah, this is strategy. So used to be MicroStrategy, but this is how they're being able to fund what they're doing with Bitcoin. At least a large part of it is through debt. Michael Saylor, and he's staying true to his conviction, by the way. He sees fiat, so the USD, as garbage and Bitcoin as the one true coin. And so why wouldn't you trade your garbage, even if it's leveraged, in return for what you see as digital gold. And so they've been doing that. Now, they've not been doing it nearly as aggressively. But the actual liquidation number, I don't remember what it is. I was looking at this a month or two ago. It's very, very low. So we would have to see insane downward pressure on Bitcoin, far more so than what we've seen, to even get close to that. And I think that they have other contingencies as well. But for Ethereum, they're just diluting. They're selling shares that are overvalued for MNAV and buying the undervalued. So there's no liquidation point. Like, the worst that can happen is, for whatever reason, their stock continues to go well below MNAV. And at that point, they might say, okay, we're going to take the cash we have, buy back our shares. Okay, that didn't do it. We're trading it. Like, I don't think that this would ever happen, but maybe they're trading at half their MNAV. At that point, even Tom Lee might say, okay, this is dumb. Let's sell some Ethereum, buy back our stock. It's increasing the amount of Ethereum to share per share to do that, which is the goal. I don't think they want to sell Ethereum, but if they have to, they'll do that.
Gotcha. What other questions does the chat have? I feel like you guys have covered a lot of my stuff. I mean, y'all been covering this for a while, man. So how did I get on the BMNR train? Because a lot of people have asked me on X. So I blame you two. And it was the super, who's the nerdiest of the nerds? The Utah, 10 kids. Chris.
Yeah.
He doesn't have 10. I think he's at like 5 or 6, but it might as well be 10. So he's raising the basketball team with the bench warmer already. And I believe it was Tanner, and it was on one, because I'm members on all the channels. And y'all did a members only after maybe SoFi or whatever the hell y'all are calling it these days.
Yeah.
So it comes on, right? So when you're a member, you get these little notifications or whatever. So I logged on, and then you guys were like nerding out on BMNR, and my WhatsApp was just like, dude, that's all I kept seeing on the chat all day. It was like BMNR and Tom Lee and BMNR and Tom Lee, and then I caught maybe half of the interview that Amit did with Tom Lee.
Mm-hmm.
Very well done, by the way. The first one, I don't think I saw it, because I think he's met with him twice. I thought the first one was really good. I didn't get a chance to see the second one, or maybe there isn't a second one. I might be making it up.
I just remember the one with Bitmine when it first came out. I think he's been on it twice too. By the way, in case some of our audience isn't aware, they did announce earnings, and so earnings is coming up. This is coming up here on November 21st, Friday. And it will be before the open. So a little unusual. Not a lot of companies report on Friday, but we'll have to see actually what this looks like. We don't know. Maybe they just put out the materials and say, okay, cool, we'll call it a day. But really, there's just two things that I really want to know with them: share count and, of course, what their strategy is regarding staking. Now, they give us more than that. I'm a really happy camper, but those two things, I think they need to be answered.
So how solvent, and again, just laboratory retriever stuff, right? Like, I just feel like you don't have to get fancy to just tell people the way that it is, right? Like, my dad told me when I was really, really young, mijo, it's like son in Spanish, term of endearment. Don't lie. Why lie when the truth is just as good and it's easier to remember? So just like spell it out. You don't have to use fancy jargon sometimes. But just in layman's terms, how solvent is a digital asset treasury like Bitmine based on the way that they structured their whole deal, right? Because I'm also invested, not a huge investment, but in one called Strive, ASST, I think is the ticker.
Yeah, I see a lot of retail interested in that one.
Yeah, it's total moonshot. I've done like zero due diligence. Well, I mean, I maybe watched like 20 or 30 minutes of some dude named Matt Cole. I'm not sure if he's the CEO or not. Like, that tells you how invested I am, like, emotionally, right? I don't even know who the CEO is. But that being said, how solvent are these companies? Because, like, I look at the MicroStrategy or strategy now, and I'm strangling strategy. I don't own one share of strategy. I feel like I could just make money with it at these levels. But I don't believe in it the way that I believe in BMNR, because I have a hard time understanding it. They did all these bonds and there's this dilution and we're going to use this. We're going to buy Bitcoin and Bitcoin is going to go up, but then we're never going to sell the Bitcoin. And I'm like, well, how does it, well, then how do you make money? Like I can wrap my mind around buying a bunch of Ethereum, quote unquote, controlling the network to a certain extent and then staking it. Like I can find a path to making a profit, right, for the company, which would be accretive to us as investors. We want things that make us money, right? Like how are you going to get your return on capital, right? Essentially. So how solvent are these companies? What is their risk to go out of business, right? Because some people don't argue that they're not even real businesses. So what would you say on that, Roy? Because I know you like to analyze the crap out of these companies.
Yeah, the cost for Bmnr, they employ a lot of people. There's 3, so I mean that's pretty scary. If they ever had to do a layoff and they laid off 33% of the workforce, boy, there would be massive headlines. They're down to 2 or something like that. So I mean, like the actual overhead is so much less than stake. Now they have to stake, but they will. I mean, it's not a hard process. So yeah, they're completely going to be fine. Same with, I don't know any other digital asset treasuries that are not constituted that way. They're very efficient. They're not spending crazy amounts of money on like employing 10,000 people or anything stupid like that. Now there might be some generous SBC that's involved in there too, but they're fine. Now the one question in my mind for Bitmine specifically, if they're trading under MNAV, which they probably are right now, will they have to do something creative? And there are other ways to raise capital. Will they just stay their guns? I think they're probably going to wait until earnings anyway to see what the reaction is. But yeah, we'll have to see. But yeah, as far as solvency, like none of them are, I don't know of any of them anyway, that are leveraged up like crazily. Some of them do have some debt. Bitmine is not one of those.
Do you have anything to add, Tevis? Or yeah,
At the
I
end of the
saw
day,
on the private chat that you guys have to leave. Somebody's got to leave.
At the end of the day, it just depends on how bullish you are on ETH. Like if you think that the ecosystem is going to be the rising tide, it is going to raise BMNR, right? And again, the reason why I would invest in BMNR over MicroStrategy is because the answer is so easy on how they can generate cash flow, which is staking. They have $12 billion in assets and they generate $400 million. Great. If the underlying value of the Ethereum rises, then there's going to be a point where like they're a massive company. And if they're a massive company, then they can always raise more money because people are going to be bullish on Ethereum. And I think for as long as you're bullish on Ethereum and you think that ecosystem is going to increase in adoption, this is why I do the videos every week, is because I look at developer activity. I look at the network activity with transactions. I look at the apps, the L2s that are being built. I look at the institutional volume because the fundamental thesis is the underlying ecosystem. It's not necessarily the vehicle. The vehicle can do nothing from here on out. Literally, they can do nothing from here on out, and they will still rise if Ethereum rises. So I think that's just the TLDR version, right?
Right.
Questions and answers. We're gonna since Tevis has a little bit of a hard stop, we're gonna pivot into Q&A time. TJ, you are welcome to stay with us. We do these and answer these rapid fire, we or at least try to. So usually like a minute, maybe 2 minutes for each. So what's our first question, Tevis?
I'll throw Shane's up here. What kind of impact could BMNR earnings have? Any danger of a downturn?
I mean, like if it turns out that they've been well under MNAV and they've been diluting the whole time, yes, but I would be pretty surprised.
Is there a reason that they hide their share count?
Yes.
That was another question my brother-in-law had. He's like, hey, what the F's the share count? I was like, I don't know. Good question.
That's the most legitimate, I think, bear case that I have in my brain. They hide their share count because they're diluting the shit out of you and me and Roy every single week. Like, well, no, I mean, like, let's be like, last week they did their update. They had 350 million in cash, and then they had what, 3.2 million in ETH, something like this. And then this week they did it. They had 609 million in cash, and they had like 3.6. And I'm like, how'd you manage to get more ETH and more cash? It's because we don't see the outstanding share count.
Yeah.
So, Roy, any objection to that?
Yes, it's because they saw what happened with SBET. So SBET were releasing, and I think they continue to, their exact share count. So you know exactly where their MNAV is, heavily shorted. And so the shorts are not idiots. They're like, okay, we know how to sync their strategy. And they did. And so SBET was stuck in the mud for a long time, and still kind of is. They've done some creative and pretty interesting things, frankly. But disclosing that constantly and consistently over time is basically giving, because these are pretty heavily shorted plays.
The shorts ammunition. You're giving them ammunition.
Now, I prefer that as an investor to know exactly where that is all the time, but I'm okay with it. Even though, you know, that's my preference. It's kind of like with Robinhood, the predictions market being on the same thing. It's like, they're going to do it. It makes money. Okay.
Yeah, no, that's a strategy that they use. Jason Less told me straight up that they don't disclose how much Bitcoin they mine daily, because if they have a bad day or two, they don't want to have to deal with that sentiment. Whereas Marathon was doing it, and it's just like whenever it's going good, everything's exciting. But then all of a sudden you have an off day or two for whatever reasons, the algorithm doesn't agree with you. It's just like now you just have to explain something that maybe could have been washed away on earnings or whatever.
Yeah. Let's see. What's your cost basis, TJ? How many shares do you own? I don't know if you share that publicly or not.
Yeah, no.
I think you do, though.
Let me see. Big money, not ready. That's what Bmnr is right now, or bag holders mint. I don't know. Some other guy had a creative one.
Yeah, we need one of those for a while.
There's like a bunch of them, right? I call it the big money nightmare. So 100,000 shares, the trade price, which will be the average cost, is $44.09. And then I've got 800 leaps at $75. So these are moonshot plays, right? Way out of the money for January of 2027. I paid an average of $17.96 for those, and they're currently going for $8.80. So I'm down 733,000 on the leaps and down almost $1.2 million on the shares themselves. I'm trying to find the year to date on here. I don't know why I don't have that metric on here. It's kind of
there you go. Midwest got you. Big money, no return.
Yes. Good job, my friend.
Yeah, so down collectively $1.87 million between the shares and the leaps, but the year to date's about 1.6 because I've collected just under $300,000 on covered calls, thankfully.
You're down more than
I'd have to do about another year of covered calls to break even if BMNR stayed at these particular levels. But we're not done. We're trying to get to 150,000 shares. If BMNR will give us a $20, $25 price action, because I'd rather buy a lot more shares at these levels than at, because there was probably 20,000 shares bought above 50, and then the rest of them have been bought below 50. So, and about 40,000 shares have been bought below 35. So I feel pretty good about those.
Are you doing covered calls on everything right now, or are you kind of waiting to get a higher price?
No, these cover calls had already been written. They expire on Friday, so that was about $90,000 that I was able to bag in about 2 weeks. And I'm doing aggressive stuff, guys. Like I'm selling cover calls below my cost basis because I have the participation trophy to the upside called the 800 leaps. So again, I don't recommend this. This is not going by the book. But whenever you're in a situation like that, and if you've already paid for the participation trophy to the upside, meaning my upside risk is covered because I bought a bunch of insurance, I can take a calculated gamble and sell covered calls below my cost basis, knowing that I would roll those up anyway to at least my cost basis. And if my shares got called away, I really wouldn't care, because if it went on a moonshot, well, then my leaps would print heavier than my shares theoretically, right? Because they were bought out of the money. So yes, and I'm able to get not too much right now. It's about $125,000 a month is what I'm able to yield on covered call premiums. That's so nice. It's better than a poke in the eye considering we're down so much. So it would still take about a year to get to even just on covered calls. I'm not selling any puts because the buying requirements are too high. So I'm just utilizing the buy right strategy where you buy the shares and you write the cover calls immediately, trying to lower your cost basis that way. And I would like to have a cost basis under 40, but not have more than 150,000 shares. So just whatever the math ends up being. That's why I put a tweet out yesterday saying it wouldn't break my heart if it went to 20, because then I would be able to accumulate the shares necessary to get the cost basis down to 40. Because I have to be able to maintain control of the position to be able to sell covered calls. If not, we just got a crap load of dead money sitting there, hoping and praying that Tom Lee comes through for us. And I believe in hope. It's a real big part of my faith, but for investing, it's not a real good strategy.
Yeah.
I gotta have something more concrete than hope. You know what I mean? Like I need to have something that I could do that's more assertive.
And since it's a Q&A period and we're trying to be succinct, I'll say yes. That
Yes.
to answer the question.
Yeah.
Yeah. Well, both Steve and Ryan asked Roy, when do you think there's going to be a crypto winter?
Probably next year. So
Great question.
as far as the timing of it, a lot of people are looking at the 4-year cycle relative to Bitcoin. Tom Lee talked about this, by the way, in the November update. So that's well worth watching. He knows a lot more about it than I do, frankly. And he's been calling for Bitcoin when it was like well under $1,000, and he puts out these price targets. People think he's crazy, and then it happens. So this time, I think he's a little aggressive with the price targets. But regardless, what you typically see right before crypto winter are a couple of hallmarks. One is like everybody and their mother are buying crypto. Your barber is talking about buying crypto.
Yeah.
Your mom and dad, who are like 95, retired, don't need anything, are like, hey, should I buy Bitcoin? You see that. You see a blow off the top rally in especially Bitcoin, but also in Ethereum as well, usually close or at the same time. And then you see with blow off top, the price consolidates after falling a good bit, and that's altcoin season. This time, the only thing that I have a question mark on is if there will be an alt season or not. I've questioned that, and that's why I sold out of my alt, which was an ADA coin a while ago, and I bought just more Ethereum with it and more Bitcoin. I can't remember what I bought, one of those two. So yeah, I don't know about that. I think stablecoin might change that a little bit as far as the way that alts are perceived, even though perhaps some of that's a little bit of a misnomer. But yeah, I would say probably next year, like maybe like mid-year next year. That's why for my BMnr position, which is a swing, I said, hey, give it 2 years, at least for me. That way, if there is a crypto winter, which I think that there will be in that time span, there's enough time to digest that and come out the other side.
Yeah. BMNR reports earnings on Friday. I think it's going to be like, they're not really doing a call, I don't think. Maybe another video and then just a PR.
Yeah, we'll see. I don't know if it's a call or not. It doesn't stay on the press release, so I'm guessing it maybe just here's the 10Q. Hopefully more than that. But
has the price crash in BMNR increased Tom Lee's timeline considerably and reached 5% quicker? So the best thing that could have happened for them? ? Yes. In short, I think so. Roy, do you disagree?
I would say no.
Do they have enough money to get to 5% right now, though?
Exactly, that's the issue. They do not. And since they're trading, either they're trading right around their MNAV, I believe. Like some people are like, hey, slightly over, slightly under. This might be the first week that they're under. You can see that it's diminishing returns as far as the amount that they're buying. And this is just because, now this is just a speculation, but if we look at their MNAV, fully diluted or outstanding, it doesn't really matter. You can see it's falling. Now, it's not always going to fall. This estimates that they're actually under. According to fully diluted, this one I think is the same as well. But yeah, if they were trading, like what really helps them, doesn't matter as far as the Ethereum price. What really helps them is to have that extreme MNAV premium. They don't have it right now. And so as a result, those are going to be slower purchases.
I mean, that's actually a really interesting thought, right? Because, they have this new CEO and everybody's asking what's happening with staking. I think there is things that BMNR could do to pump their stock, even though the underlying Ethereum hasn't pumped. It does beg the question, tinfoil hat on, is there anything that they're going to potentially do to say, hey, we don't have enough runway to get to 5% on time. We got to pump our stock so that we can pump our MNAV a little bit. Let's announce some staking. Let's give a timeline. Let's give some more clarity, whatever the case may be. Because once they do that, let's say they do it on Friday, then that could pump the BMNR stock, even though Ethereum is still depressed, which is the best place that they could potentially be.
Yeah. You got another question? Because I put a good one that I thought would be good.
I will bookmark it for you.
Yeah, we could see that Nvidia when they report earnings, that could stabilize. We've seen that in the past too. I mean, especially because a lot of the pullback, at least the prevailing narrative is, AI is a bubble. Jensen is going to hit that head on. Like, he's not going to be like, oh, we're just going to ignore that concern that's out there in the macro. And obviously his answer is no, it's not a bubble. Don't be dumb.
Mm-hmm. Jensen already gave us $500 billion visibility for 25-26 at GDC, beat pre-event consensus by 12%. Tomorrow's earnings bar is sky high. What can possibly top that and actually move Nvidia higher?
Guidance.
Not much. Not much. It is. Do you think it's priced to perfection? Because I think it's got to be. I mean, less so now, but it's from a market perception point of view.
I don't think so, but we'll have to see. Nvidia doesn't feel pricey to me at all here. It's never felt pricey, honestly. So since I've owned it, even at its all-time high.
Fair enough. If Tom Lee started staking, the price of Ethereum would start increasing, as you guys already said. If he holds on staking, he can continue to buy it at a cheaper price.
I'm not following that.
He's saying basically by locking up 5% of that supply, Ethereum is going to essentially go up. But at this point, like, there is also always a possibility that they can sell the supply that's not staked.
Oh, yeah. Yeah. It makes sense to have some that's unstaked, but not all of it. Like, they own a huge amount. So, yeah, they really do need to touch on that in earnings.
Mm-hmm. Is it safer to just buy ETH? Yes.
Yes.
If BMR MNAV is under 1, how do they get the cash every week to buy more ETH?
No one knows the MNAV except for Bmnr themselves. We don't have an updated share count. All we have is estimates. Some are like, hey, they're trading way above their MNAV, and some are way below. I think that they're very close. We'll have to see. We could all be wrong. But that's a good question. If they're under MNAV, and they may be this week, do we see basically no purchases except for what is their cash right now?
New CEO appointment last week and a May 2025 1-for-20 revenue reverse stock split. What is the company overall plan? We're going to find out on Friday, hopefully.
I don't know. Is he referring to maybe like
BMNR?
Well, the reverse stock split, or is he referring to like what happened in the past?
Yeah, May 2020.
Oh, okay. All right. Yeah, I was like
2025. Sorry.
Yeah. Oh, okay. Yeah, I wasn't following that part. So yeah. The overall plan is unchanged. They're going to acquire 5% Ethereum.
Can you guys discuss if you think yes, no, we'll have a Santa Claus rally or end of the year rally, or not anymore due to the correction? Like, so I already mentioned earlier in the stream that I think we will. I think having a month between now and then is going to help clear things out. I think the counterpoint you could make to that is that because there's a lot of sell-off over the past 2 weeks, you could have more tax loss harvesting, which could continue that trend. But I don't think it's systemic enough to cancel Santa Claus rally. But I think the Fed is going to get us out of hot water this time around.
Yeah, it's extremely likely that we have a Santa Claus rally, in part because of the pullback, in part because the shutdown is kicked the can down the road until next year. So Santa Claus rally is impacted by that. People that are on food stamps have their food stamps, SNAP benefits back. And so they'll still buy gifts. People will still spend. Buy now, pay later has opened up a new credit box for a lot of people as well. I don't love that. The reality is people will absolutely use that. Well, I guess I do like it a little bit because I'm a PayPal shareholder, and they're really accelerating that. 20% cash back, by the way. It's like a little, they're only doing it up to $15 million. And that's like half a day's free cash flow for PayPal. But I mean, I'm going to be using that for sure, because like 20% cash back, why not? So between those factors, plus the rumors, which are circulating very well. And I think it's very strategic by Trump to do this, not just from a political standpoint, but also to make sure consumers spend that $2,000 stimulus that they're talking about as well. A lot of people are not like, well, maybe I'll get it, or maybe I should take care of my debt or get my teeth fixed or whatever. They're like, oh, cool, I'm going to get extra money next year, which, by the way, a lot of people will because of the tax returns. An extra like $371, I think, per person on average is going to be delivered to them beyond what they had the previous year, which was not withheld by the IRS because the code changed due to Trump coming on, and they didn't adjust withholding. So there's a lot of factors that line up with people spending healthily. Now, is there a possibility we don't get one? Absolutely. But the biggest piece of that is consumer spend and consumer sentiment, and it should be pretty good through the end of the year.
Cool. Okay, let's answer TJ's question. What would cause Bmnr to fall, in your opinion? I think
Fail.
Oh, to fail.
Yeah.
If yeah, go ahead, Roy.
Well, I was going to say poor execution. Like if they start diluting under MNAV, and it's not very clear on that why exactly they're doing that. They run out of cash like all the others, and they just have to sit there and wait for Ethereum to lift their boat. Well, yeah, I think that's really it.
Well, I think
if
Ethereum fails, that's the clearest answer, right? If something happens to Ethereum that loses the public trust in Ethereum, it has, severe downtime for the first time ever. It's massively hacked. It's Vitalik goes off the rails. Whatever happens with Ethereum, that institutions are like, you know what, we don't want to do this anymore. Or if another let's say blockchain is essentially the choice of Wall Street, then that's a huge part of the bull case. And then once you rule out the macro fears, like the underlying assets, then it's micro in terms of decision making. If Tom Lee quits, if they sell their underlying Ethereum and pull a ETHZilla, I didn't love that move. It doesn't send a good signal to the market. Like those are all concerns about how they manage that treasury. So that's how I would think about it. It's like macro Ethereum related, and then micro, which is Bmnr management specific.
Yeah, and if Tom Lee quits, that would also be.
Yeah, I mean, there you go. Is it really stupid buying a 2x Bmnr ETF? Once the bottom is confirmed, there's going to be some sick gains. You tell me what the bottom is, and I'll tell you if you're right or wrong.
I said this is not financial advice, but the way that I look at it is I only put money in leverage, whether that's options, whether that's I do have a little bit in BMNU. I'm not doing this, by the way, here, but I will only put money in there that I'm okay lighting on fire and letting it burn to nothing. And so if you're putting money that you're like, hey, it's $1,000 for me, but I'm not going to miss it, fine, great. But yeah, leverage is dangerous because it works both ways. And right now people are feeling it in a way that's very painful.
Yep. Just answering a couple, two more questions, and then I actually have to go. What's your opinion on VG, Roy? And Tevis, are you still into next? Yes, I am, sir. Go ahead, Roy.
Yeah, energy, huge demand. A lot of stocks have run up. Two spaces haven't. LNG specifically, and also solar. Solar is a lot more dependent on regulation, so it's going to take some time. I'm still bullish. I don't own any positions. We'll look back to get back in. VG and LNG, I think, is going to be next. Now, there are other players as well out there. VG, their modularity that they do basically helps them do capital projects, saving a lot of expense, but also, like, if you look at the timetable and timeline, they're actually ahead, which is, I think it's unheard of from what I'm hearing from many people that are actually in the space and in the industry, most of whom are very bullish on VG. So I'm like, I'm going to listen to them. There's arbitration cases out there too. I think all the negativity and stuff is largely baked into VG. So, yeah.
Cool. And let's see what Roy, do you have any opinion on AppLovin?
Yeah, they're positioned very well. I don't know the leadership or anything, but that's one form of advertising that's not going to go away. And frankly, they do better mobile ads than anybody. So yeah, they're going to grow more.
Yeah. Okay, yeah. Will SoFi ever recover? No, it's going to go to zero. Sorry,
Yep.
you're going to lose all your money. I don't know what to tell you guys. Thank you, everybody, so much for watching. Really appreciate your time. Sorry that this was only a 1 hour and a half stream as opposed to our longer ones. Thank you, TJ, for being a guest. And like and subscribe, and we'll see you next week for Bootleg Weekly on Tuesdays. Okay, bye now.
Later, guys.